Get across to Chris Weston, who joins us from IG Markets in Melbourne. Chris, very good morning to you. Let's take it back to the overall market and I guess the sentiment out there. The eyes have been on Greece over the weekend, but they've very quickly shifted over to Spain. How have you read the follow-through for our market today?
Well, I mean, it's a wait and see, really. I mean, the volumes, as we know, we talked about time and time again, are lacklustre again, and I think it's just got this kind of holding pattern now. We traded down to 41.03, down about 0.8%. We had a bit of a spike back up to 41.17, and we seem to be just sort of hovering around those levels at the moment. And you know, we've got the sort of the lead into the market now. I suppose it's forward-looking, and we're going to have to look at what happens. You know, people are going to keep their eyes very firmly on Bloomberg. People are their eye on Twitter. And just see the sort of headlines that we're coming out, whether PASIC are going to actually put a parliamentary person in and join up with the New Democracy, whether or not they actually go down that channel. There was a Reuters report overnight suggesting they could do that, although the PASIC were saying that they wanted a rainbow coalition, they wanted everyone involved yesterday. So that's going to be the interesting thing. I think if we get something very more concrete about that later on, then you could see a bit of a melt up into the back end of the day. It's been interesting to see some of the position we're seeing in gold stocks at the moment. Gold was up about $4 from yesterday's close, by the close this morning, but it closed above a really important level for me at 16.28, just above the 38% retracement of the Feb May sell-off. So I think that's an interesting scenario. I think a lot of people are trying to get set ahead of the FOMC meeting. To me, it's a bit of a gamble how that's all going to go, and there's going to be some massive volatility ahead of that. But I think we are seeing some positioning. Medusa's doing well. You're seeing a bit of buying, some modest buying in Newcrest mining as well. But I think all eyes really now focus on the FOMC and also, you know, what's happening in terms of Greece and the headlines. But the Spanish situation, you're right. I mean, it never really went away. It just had someone else just took the limelight for a day or so. I think, you know, yields at the moment 7.20 or so. You know, it's unsustainable. We talk about it time and time again. There's going to be a report at the back end of the month by some independents, and that was part of the reason. One of the Spanish newspapers coming out last night saying, you know, the independent review suggests that the Spanish banks need to hold capital or tap capital for 150 billion, 50 billion more than was previously initiated, plus the fact that you've got these bad loans as a percentage of total lending increasing to another 10-year high. You can see the big key reversal on the Spanish market last night, and you know, that certainly helped. Didn't help the yield side of things either.
Yeah, so that rumbles on, and you've mentioned the FOMC meeting, which will play out the next few days. Big risk event, especially because last time we were anticipating a speech by Ben Bernanke. We're expecting big things, and he disappointed. So I guess there's potential for disappointment again. What realistically can be expected from this FOMC meeting, and how do you play it?
Well, I mean, yeah, just on your point, I think silver was down 8% on that day. So yeah, and people getting carted out on the back of that. Obviously, people who are short silver did very, very nicely. But yeah, for me, there's to break it down into a very simplistic term, I think the Fed will come out and acknowledge the downside risk. There will be a more dovish statement. There's a pretty good chance that they will lower their projections for core PCE. You remember the target on a long-term projection is 2%, so they could lower that. There's a potential they're going to lower their growth GDP forecasts and their employment forecasts to even further away from full employment from where they want to go at the moment. So, you know, that would inspire a few people to suggest that we are going to see an asset purchase program being re-announced, a QE3 program, so to speak, there. Whether that's going to be fully sterilised or not is yet to be seen. Now, Morgan Stanley, Goldman Sachs are calling and saying there's a high probability that we are going to see the Fed coming out based off the fact that they're going to lower their projections for economic growth and therefore inspire a new QE3 program. If that happens, then obviously being short dollar yen, being short the US dollar in general is going to be a very good place to be. Gold will see, you know, good upside. We're looking at for their test the 1700 level. There is a good chance that could come through. Probably the base case by most banks now is that we're probably likely to see an extension to Operation Twist with the lowering of those economic projections. That, in my mind, will you know, the Operation Twist obviously is selling out the front end of the curve and obviously looking to use those funds to buy the longer ends and try and keep the 10-year yield between 150 and 170. I think the market will be disappointed with that. I think we'll see modest downside in gold, a little bit of upside in the US dollar on the back of that, and equities will probably come under some pressure as well. And then obviously there could be another situation where the Ben Bernanke just does nothing, as you say, comes out, lowers his projections for economic growth and just says, you know, we are here if the worst case scenario comes in, we are ready and primed to do further asset purchases. Not inclined with what we saw from Janet Yellen the other day. If that comes out, then I think you'll probably see a big reversal in gold. I think you'll see a lot of further downside to that 1521, 1532 level, and I think equities will come under some severe pressure as well. So I think that's going to be the three different plays that you've got at the moment. It really you could make a very strong case for any three of those arguments right now. The investment banks are all calling different situations and they're positioning their clients accordingly into those different trades.
Yeah, and particularly in currencies, because you might have heard me say that we were speaking with one of the other guests earlier, saying the currencies really diverged from some of the other assets overnight, as in, you know, some of the risk currencies actually held up quite well, and maybe that's because there's already very much an eye on stimulus in the currency markets.
Well, you saw gold. I mean, gold, we wanted to see a close above 126.68. That would have been a really big positive situation. We got up to something, I think, 127.48 in the early session, and then we closed right down at the low 120 or the sort of mid 125s. Whereas the Aussie dollar in the other side of things, actually, as you're right, I mean, it closed up 68 pips on yesterday's session. Very strong. You know, the Kiwi dollar seems to be held up, so that seems to be the trade. If you believe we're just going to get a straight out, if you think we're just going to get a straight out extension to the operation twist or none at all, probably being short Euro CAD would probably be a really good trade there. You take the dollar out of the equation, but you've still got that sort of leverage to the US economy. If you think they're just going to disappoint the market, I think that's going to be a good situation going forward. But you're right, I mean, there seems to be some opportunities there. Plus, you can look at gold last night. I mean, gold traded down to 1606, came straight back up and actually closed up $4 from yesterday's close, and that's despite the euro coming off as well. So you can see that coming through quite nicely. Dollar yen was down a little bit. So all the implications are there that the market's starting to warm to the idea of asset purchases, although very modestly at the moment.
Probably expecting light volumes until the FOMC outcome. Chris, is that fair to say?
I think you're right. I mean, I think it's one of these things where, you know, you can either take this sort of big gamble and have a very strong concerted view as to what the Fed are going to do. You know, Yellen's comments the other day did give a very clear indication that perhaps the Fed are, you know, verging in that QE3 camp at the moment. Some people are saying because the Greek election seems to be going the right way, that's taking some of the QE3 wind out the sails as well. But I think you've got a strong view, then you can stick behind it and try and position yourself in that QE3 trade. You will need to have a very strong risk management strategy, and I think that as a result, you'd probably like to see the VIX pop up into that meeting as well as people buy put protection. But you know, you've got to trade with stops, and guaranteed stops even more so in these kind of markets. But you know, if you don't have a view, sometimes as we've talked about before, you know, having the ability to react rather than prophesise is probably going to be a better situation here, because it's not going to just be a one-day event.
Fantastic. Chris Weston, thank you very much. Appreciate it.
Cheers, bro.
Chris Weston from RG Markets in Melbourne. Another